And real estate and financial guides are back on your hometown station, AM 1220 KHTS, to share with you what you need to know in order to navigate the sometimes confusing markets and guide you towards financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
Talk about great advice. My goodness, Lisa Odom is full of it today. No, she's been sharing with us such great information. Lisa, we need another hour, but unfortunately we have to go to the real estate hour, so hopefully you have seen how fast this hour has gone by with the great information and all the fun we're having with Lisa Odom, with McDowell Odom, attorneys at law, right here in Santa Cruz. I mean, how long have you, you guys have been around here for, well, most of your life.
Well, we started our practice together almost 4 years ago.
Right, but
So.
you guys have a lot of experience in the house.
Oh, yeah. My mom, Claudia McDowell, has been practicing for 24 years, I think, and I'm almost at 10.
Wow, very nice.
Can't believe it. It went by fast.
It's actually similar to our experience.
Yeah, actually, very similar.
And I know we'll put our experience against any other mortgage planner in this town, except for the ones here at Cherry Creek. We all work together, so it's awesome. All right, so Lisa's been sharing with you the pros and cons and the importance of estate planning and wills. You know, it's something you brought up. I know most of you probably thought a will and a trust is the same thing. Once you have a trust, you therefore have a will, or vice versa, but they need to go hand in hand, and they protect different things and are attached to different things. And it's really good you brought that up, because most of us wouldn't know that, and therefore it's always these little, okay, let's talk about those little things that are left out that change everything. Like you were talking about one little thing that this one particular unfortunate woman was, unfortunately about ready to pass away in hospice, and thinks she's all good, and omitted a heir, one of her heirs. I mean, and if it's one of her children, that could be detrimental. Can you imagine the kid? I know I'd be really bummed. Daddy didn't love me. But it's important. All these little things. You talk about typos, and because if you just do your thing, and Gino and I are famous at typos, so.
Typos are a huge problem.
Well, I'll tell you, here's what I'm thinking, right? So I'm listening to the idea of the pour-over will, and I'm thinking, well, most people say, oh, no, I know what my assets are. Well, yes and no, because, for example, just because you hold an American Express credit card, you probably have a $15,000 life insurance policy that's associated with that. Just because I work at Cherry Creek Mortgage, there's a $25,000 life insurance policy that's associated with that. I may have named my beneficiary 8 years ago. That person may no longer be alive.
Yep.
So what happens when I name a beneficiary on an asset, and then when I am no longer around, does my trust trump all of the individual forms that I've filled out over the years?
No.
How does that work?
So it depends on a lot of different factors, but if you've, let's say you've named your children as the beneficiaries to your life insurance policy, and for some reason they have passed away and predeceased you, then the gift to them lapses because they're no longer available to take their gift, which means that it has to go into your estate. So that's why one of the big problems that we run into with people who are not aware of their assets, and if they haven't used an estate planning lawyer, have not really been probed to think about this, is that now it may be that they put everything else in their trust, but they forgot about that life insurance policy, and they have to probate that $250,000 policy, because you have to probate any assets if they exceed $150,000. Under $150,000, there's something that we can do called a 13100 declaration that will avoid the full probate. In some cases, not in the instance of real estate though. Real estate you have to use a probate, trust, or joint tenancy to avoid that result pretty much. But yeah, this is a concern that we deal with a lot, and that's why a lot of times we will suggest that either the primary beneficiary be the trust, or a contingent beneficiary be the trust, or there's some tie-in with that.
So part of the whole experience, and part of what's actually important, isn't so much necessarily the building of the trust, even though that's important.
Right.
It's also like stirring up the thought pattern. What do I have? What are my assets?
Yes.
Your spouse might not even know. My wife probably wouldn't even know that I have an insurance policy with Cherry Creek or with my credit union or whatever. A lot of them just give you that stuff.
Oh, yeah, absolutely.
So I'm just thinking, so part of the exercise is starting to think about the assets that you have that
Mhm.
can be passed on that you probably didn't think of.
Right.
Or, let's talk a little bit. You mentioned, you grazed the fact that things need to be maintained. I know for a fact people that are named in my trust are no longer living. I need to go change it. It's something I have to do. So let's talk a little bit about maintenance.
I
How
don't know
important
if
is
I
that?
would want to be named in your trust then.
Well, they were older than I was.
Okay, just
it was
checking,
okay. It
just
was all in the
checking.
natural
I mean,
order
we're
of
business
things.
partners and friends. You might go, Don, I'm going to name you as part of my trust. I don't know if they keep dropping off.
It's all in the natural order of things.
Okay, just
No, I
checking,
mean, that's a
just checking.
huge, I mean, again, it's a huge issue. You don't want to have somebody you've given a gift to not be there to take their gift, because that's when we have the potential issue of the probates and the potential issue of an asset that people have to scramble to figure out how to get it out of someone's name. So it's a huge issue.
Now I'm going to touch on something a little more controversial. What if you also mentioned you have children that aren't old enough to take care of themselves,
Gino,
per se?
you just need to set up an appointment with Lisa, darn it.
Well, absolutely, but this is really important because these
No,
are
I
the
just
things
laughing
that
because you're like answering. Hey, this is cool. I
free
got
legal
attorney,
advice.
yeah, legal advice. You just put it on the show, and I can ask all those questions.
I am bringing real life scenarios
I
to
know,
the show.
I know.
So,
You
your
sound
children
very
and my
close to
children
home.
are not old enough to take care of themselves.
No.
Does that get addressed in the trust too? What happens if my
Yes.
wife and I both die together in an accident? Who's going to take care of my kids? Of course, I assume it's my parents, but what does the state say?
Well, so yes, I mean, this is something that we do as part of a complete estate plan without question. We always nominate guardians, so the people that you and your wife have selected to raise your children in the event that you weren't able
Yeah,
to
I
do
noticed
so.
you didn't mention me.
Yeah.
No. Don and Cindy, love you guys, but I won't put the kids under you for sure. I won't burden you with that.
But there's a lot of facets of that. So not only do we help you, through the process of naming them, and also give some guidance to the guardians who you select on religious matters and access to
wow.
your other family members. Sometimes the person that's best to raise your child is not a family member, but that doesn't mean that you want them to not see their family. So we can put those kinds of provisions, and we do in our nomination of guardians, on things that are very personal, because I think as a parent, the thing that scares you the most is not being there to raise your child. And will they be raised the way that
no
you would have
doubt.
raised them? So that's a huge issue. The other thing that we can do in the trust itself with respect to their financial matters is your children cannot inherit that kind of money. It's just not, they cannot keep it. They're too young and have to go to their guardians. Well, sometimes the people who will love your children the best are not the people who are best with money.
No doubt.
So
you hear about
you
that all the
can-
time, especially like with the stars. They're like, my parents spent all my money.
Exactly. So the cool thing is that you can put some restrictions and things in the trust with respect to your children's trust and how it's doled out. And that's an analysis in and of itself, because do we keep all the money together? If you are raising your children right now as you are, all of your money is together. You're not watching how much you're spending on one child versus another child. You just spend it all on your kids collectively. And or do you have it split into separate trusts, and then the guardian has to go to each kid's trust? And these are all issues that we have to talk about. And the age of the child matters, and what issues the child has. When we do a lot of special needs trust planning, because there's, everybody hears more and more about autism and other special needs that affect children. What people don't understand is that down the road, if they need government benefits, their inheritance, let's say you left each of your kids $1 million, their inheritance could actually make them unable to get some of their social benefits if we don't craft it very carefully. So these are issues that we think about and that we go through with our clients to make sure we understand who they are, who their family is, and what kinds of issues we need to be aware of. The other big thing is, even if your child is 21, that doesn't mean you want to give them $1 million. Some children are not mature at 21. Actually, I would say many are not mature.
I was
would
not.
say. Yeah, can you imagine giving you money, Gino? Oh my goodness, I'd like to mess with my kids. Just say you can't have the money. You can't have the money if you're caught eating ice cream until you're 30. Just to mess with them.
No carbs.
No carbs.
No
Yes,
carbs.
Exactly. All right. Well, we have touched on so many, and I know you can go on and on and on. I have 3 pages of reasons you need to really think about talking with an estate planner. It will, if you have a family, I can't even believe you wouldn't have a trust. Talk to Lisa. She's a very nice person and very educated and knowledgeable. How can they best get a hold of you, Lisa?
Call us at 661-449-9630.
All right. McDowell, Odom, attorneys at law, Lisa Odom, thank you for joining us. Stay tuned for our real estate hour coming on.